Okay, folks, so it's official. The Federal Reserve has done it again. They increased rates once again, but they did it at 25 basis points or 0.25%. That was what was expected. But the good news is the market ramifications on all this is nothing but positive. So let's get over to what's going on. Right now, we're seeing the MBS market spiking. Well, these are my charts. Just all you need to know is, I got the chart right here. Here's where the MBS were trading before the Federal Reserve came out and made this decision. Then you see this spike up. Look at over here. It went from here all the way up to here. You might be thinking, Dan, that's bad news. Rates just went up. No. What we follow here is the MBS market, the bond that trades on Wall Street that affects mortgage rates. So let's get to it. What we saw today is the Federal Reserve came in and they raised rates from 4.5% to 4.75. Okay, that was expected. That was what analysts expected. You can see it right here. But let's see how the markets are really reacting to all this. Well, the good news is the Dow Jones is up 6 points. It was down about 300 earlier. S&P closed up 42, and the NASDAQ, look at the NASDAQ. It finished up 231 points. So the stock market likes this. How about the bond markets? Well, the bond markets are loving this. But before we get there, here's the key points that I want to make to you. So what's happened is right here on the board. So I'm going to dissect this here in a minute. Powell says it's certainly possible for the federal funds rate to stay below 5%. That was the missing part of our puzzle. So in past meetings, the Federal Reserve came in and said, well, the federal funds rate's probably going to have to get to like an equal balance number. And it's like, what is that number? Well, some people thought it was 5.1, 5.25, 5.5 maybe even 5.75. But now he's coming in and saying, well, they might not even top 5%. So what does this tell us? Well, currently the federal funds rate is 4.75. He's expecting it not to most likely increase above 5. So at most we have about 25 basis points or 0.25% left in basically increasing rates. So now the markets are saying, okay, there's probably one more and done. A lot of the speech that he said kind of doesn't reflect that, nor do they want to reflect that. Because if they came in and said, okay, everything's peachy, hunky-dory now, we're going to stop raising rates, the markets would go nuts and we'd be back to where we are. So they're staying on the sidelines, trying to talk really bearish to say, hey, there's still plenty of room to do this stuff and everything else. But I think this is the key point. They expect the federal funds rate to be maybe 5% or stay below that, or 4.75 right now. So there's not enough room right now for a lot of these things to move. So the next piece of the puzzle we want to look at is what the MBS markets are really doing. So let's refresh this. The MBS market is up 48. It is going nutso. You can see right here, the charts right here. We basically bottomed out right through here, and we've been upticking from there. Again, MBS prices. What this means is if this number goes up, mortgage rates are coming down. Let's see if Mortgage News Daily has updated the rate sheets yet. Because if we have, look, that just changed to 55 again. So it's up 55 basis points. So that should mean that we have at least 1/8%, maybe a little bit more coming off rates. Where are rates right now before this adjustment? Well, let me see if they've refreshed these yet. They're at 6.16. So we just might be in the 5.99 range next 20. So it was nothing but good news from the Fed. We're going to see the kind of the effects tomorrow in the market. But I think that's nothing but good news right now. You guys out there looking to buy your first house, maybe in 2020. So, good news from the Fed. If you find my information valuable and entertaining, all I ask you to do is give me a thumbs up, subscribe down below, and hit the bell every time I post video. You get an alert. Thanks so much for watching. God bless, guys, and see you tomorrow. Bye-bye.